Bitcoin plunges below 103K after Moody's downgrades U.S. credit rating, threatening a massive $393 million leveraged position with liquidation at 95K. Meanwhile, Ethereum crashes nearly 5% as altcoins bleed, but one protocol is defying the trend with its revenue model. This is Crypto Pulse, your essential 6-minute market update. Hey crypto family, Alex from Moonward Capital here with your essential market update. If you're looking to stay ahead of the crowd, you're in the right place. Today we're breaking down this significant market correction and the surprising winners emerging from the chaos. Let's dive straight in. The crypto market is experiencing major whiplash today as Bitcoin struggles to hold key support levels following Moody's downgrade of U.S. credit rating from OIOERA to AEO1. This pushed Treasury yields above 4.5%, triggering a ripple effect across markets. Let's look at the numbers. Bitcoin currently trading at 104,650 MES, down 1.12%. Ethereum at 2,147, down a concerning 4.25%. Solana taking an even bigger hit at 163.22, down 6.27%. The overall market cap sits at $3.16 trillion, with Bitcoin dominance rising to 64.7%. A clear sign of capital rotating back to BTC as investors seek safety. What's fascinating is the sector divergence we're seeing. While L1s are down 7.53% and AI tokens are getting crushed at 10.74%, social FI tokens are UP 2.44%, and ICM tokens are gaining 8.37%, showing a clear flight to specific narratives. Now to our biggest story, a major whale position is at serious risk. Trader James Nguyen has a 40x leveraged $393 million Bitcoin position, facing liquidation at 95,151. This is absolutely critical because this price level now represents a major market support zone. If Bitcoin breaks below 100K and approaches this liquidation level, we could see a cascade of forced selling. Despite the price weakness, funding rates remain positive with BTC at 13293 and ETH even more bullish at 9591, suggesting traders are still positioned long, potentially creating even more downside risk if these positions unwind. The most fascinating story emerging from today's correction is the clear divide between purely speculative assets and those with proven revenue models. Take Hyperliquid. The HYPE token continues outperforming the market, trading at 2568, up 5.6% while everything else bleeds. Why? Because it generates approximately $2 million in daily revenue with 97% used for token buybacks. This creates a virtuous cycle. As trading volume increases, more revenue flows to buybacks, supporting the token price and attracting more users. We're seeing a clear market preference for sustainable value over pure speculation. Ethereum's underperformance is raising serious questions. It's down nearly 5% to 2,147, showing significant weakness versus Bitcoin despite bullish funding rates. This negative price action suggests potential forced liquidations and could indicate a more significant shift in market structure. If you're heavily allocated to ETH, pay close attention to the $2,300 support level. A break below could trigger further selling. Looking ahead, several critical events could impact the market. First, Pyth Network has a massive token unlock coming on May 20th. 58% of total supply worth $334 million will be unlocked, potentially creating significant selling pressure. Second, the U.S. Senate is scheduled for a decisive vote on the Genius Act by May 26th. This stablecoin legislation could provide regulatory clarity and potentially boost crypto markets. Third, the Texas Bitcoin Reserve Bill has its second reading on May 20th. If passed, Texas would become the third state with official Bitcoin reserves, a major legitimacy boost for the asset. So what's the play here? 3 key strategies to consider. 1. Monitor BTC price action around the $95,551 level. This whale liquidation point is critical. Consider reducing leverage until volatility subsides. 2. Evaluate your portfolio allocation between Bitcoin and altcoins. This might be the time to increase BTC exposure to at least 50% while maintaining some USDT reserves around 10% to capitalize on deeper dips. 3. Look closely at protocols with proven revenue models like Hyperliquid that are showing resilience during this correction. The market is clearly rewarding sustainable value creation. For conservative investors, consider 45-50% BTC, 20-25% ETH, and 20-25% stables. For aggressive traders, you might look at 40-45% BTC, 30-35% ETH, with selective exposure to quality revenue-generating protocols. The key takeaway today: this market correction is creating a clear divide between assets with real utility and those based purely on speculation. While there's legitimate concern about further downside, especially if Bitcoin breaks below $95,551, this could also present buying opportunities in quality assets. That's your crypto pulse for today. If you found this useful, hit that like button and subscribe for our updates every 12 hours. I'm Alex from Moonward Capital, helping you stay ahead of the crowd. What do you think? Is this correction a buying opportunity or the start of a deeper pullback? Let me know in the comments below.